Doesn't go away.
Morning, everybody. It's the 5th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, gentlemen.
Good morning.
Everybody all right?
Everybody's all right. We're all right. Lockdown. Deadlock.
Yes.
Locked in.
Deadlock, yeah, that's about right. So, obviously in the UK yesterday, we entered our third full lockdown, shutting the schools, ordering the public to stay at home as medical chiefs warned that the National Health Service could be overwhelmed within 3 weeks. Baffling, really, considering Boris Johnson's appearance on Andrew Marr on Sunday morning, saying schools are one of the safest places to send your children, and literally the next day, he shut them until after February half term.
Yeah.
You know,
I watched him on Sunday. He was definitely a bit uncomfortable in his seat, shall we say? There was no straight answers. I think he's just waiting on advisors, and but he's in a hideous position, isn't he? But I think he should have just done it straight after Christmas, really.
Yeah, it would have made a lot of sense. Instead we seem to be following suit with devolved nations like Scotland, rather than us making the calls and stepping up and getting it done. But anyway, it's what it is. Plan is to vaccinate 13.9 million people who are at the highest risk from the virus by mid-February. Obviously, the impact of this new strain of the virus is causing massive issues, and there's another version of the strain I've heard that's come from South Africa as well. I don't know if you guys have heard that.
That's been out a couple of weeks, about 3 or 4 weeks.
There was a flight ban from UK to South Africa or vice versa from just before Christmas, so further concerns about that. How many more strains of this virus are we going to have? Hopefully the vaccine works against all of them.
Tracy got a report yesterday saying that 28% of people that have had the vaccine have had adverse side effects already.
Oh, fantastic! Just what we need.
So if that gets thrown into the mix, then
Tracy, does she work for the WHO as well?
No, she used to. Her mate works for a mental health company, or they're very close, or seem to be very close with certain government officials.
We're all going to be suffering with mental health at the end of this,
if not already.
Yeah. Homeschooling is certainly going to tip me over the edge, I reckon, between now and half term in February. Already had a stress this morning.
I've seen pictures of the back to school sections have been replaced by alcohol rather than pens and bits of paper.
Thrown dry January out the window, isn't it? Pretty quickly.
Ended at 8 o'clock last night.
Definitely. Right, okay. So yesterday it was very much risk on to start the day. When the US markets come in, it looks as though a bit of that risk came off. US equity markets had a bit of a setback. All sort of fairly flat today. Again, FTSE leading the charge. I haven't really paid attention to much on the FX side of things, but it looks like sterling's off a little bit, and the risk assets like Aussie dollar and New Zealand dollar seem to be the leaders this morning. So Ian, I'll throw it over to you. You can run through some charts for us and give us your view.
Yeah, I mean, I've just got dollar index on again because I think I keep on trying to highlight that I think this is going to be the driver on this risk play if it's going to play out. So this basically was yesterday, and obviously risk off is risk on for dollars or buying dollars as a risk asset, and we're seeing quite a decent move to the upside. This is only a 30-minute chart, but this sort of forms quite a decent pattern. So if we go back to these, this one that Stevie poo-pooed yesterday, literally,
the crap formation.
The crap formation, which is actually a butterfly. So we got down to 89.37, was pretty close, and then we've seen a decent move to the upside. We've closed that gap that we got from New Year's Eve, and then if you go to this shorter time frame, we've had a decent move to the downside, and we're stalled at 50%. Now, Elliott Wave enthusiasts will probably look at that and think, well, between 50 and 61.8%, pretty keen to sort of get long of dollar. But if you trade cipher patterns, or you look at cipher patterns, then there's a potential to get down to here. And I think with the previous swing low down there, that could look like quite a nice reverse head and shoulders. This will be the left shoulder, this will be the head, and then this confluence area here, which is 89.52, 89.50. So quite a tight sort of confluence area with a stop below there offers quite a decent risk reward, because if this does break to the upside after that dip, then you'd be looking at a move up towards here, 90.48. So I think as a risk reward trade, sort of buying this the dollar dip down here offers quite a decent setup today. So I'll stop waffling about that. I mean, sort of again, these are obviously a reverse reflection on the dollar. So we had that pattern there, which moves to the downside, and then we've got this double top formation. Again, I think we could see move back up towards this sort of resistance zone around about 123, the figure, as that dollar adjusts. But I think as far as sort of bigger picture analysis, it's looking like we're completing a fifth wave. We're starting to get a bit of divergence on these higher time frames. If you squint quite hard, you could probably see a wedge formation forming in there. So I think the bias is starting to flip to the downside. I said not so much for cable yesterday, but then cable had a really decent move lower. I still can't see anything really in the way of resistance until up here, but we'll wait and see. Dollar Swiss, because it's also a risk asset, the Swiss gets bought as well as the dollar. We've had this choppy sort of price action on the 4-hour chart. I still think we're probably going to move a bit lower and get down towards this confluence area here, which is at 86, 87, 86, 63. And that would probably line up with the confluence area in the dollar yen, 102 sort of 44.38, 102 48.38. So that sort of area, I would look for potential reversals in that move. Dollar CAD had a decent move to the upside. There were some shenanigans with OPEC yesterday. I think it was Russia wanted to increase production now, and everybody else disagreed with them, and they threw handbags in the middle of the table, and it all got cancelled, and they're all going back again today for another go. So again, even though we've got this sort of decent move to the upside and we've got this gap close from the weekend, I've really got nothing in the way of support until around about 125, the figure, which is a lot lower, which basically should mean higher oil prices. There was, or I did see something yesterday about an attack on sort of an oil pipeline, but it's not reached any of the big sort of news stories this morning, so I don't know how much of an impact that's had. Aussie dollar, again, some decent sort of confluence areas. I thought this was going to continue to the downside from yesterday, but it hit this 161.8% fib and has moved higher. Again, I'd look at sort of potential double top, or even a treble top formation, or maybe even just a little spike higher to make some sort of reverse head and shoulders pattern. What else was I seeing? One chart that I thought was really interesting is Euro New Zealand, if we get down to the correct levels. So basically this was a crab formation. And we
crab. Sorry, I thought you were saying crap.
All these years, or months, I should say, because this is obviously only something that I've been looking at for the last 2 weeks anyway. So crab formation, but this, I think if we get down to this crab formation, which is at 68.82, 68.70, and it's not a million miles off there really, but this is a daily chart, then I think that offers a really good risk reward setup in Euro New Zealand. And I quite like that because the baskets are showing limited downside for Euro, but look like they've formed a top in New Zealand dollar. So I like that over the long term, but only down at this level. Me done.
Thank you, Ian. Steve, have you had a look through the indices and some of the metals this morning?
Yeah, I've as Ian sort of like alluded to, the OPEC Plus deadlocked yesterday, which is very unusual. Normally they do get a sort of settlement. Saudi Arabia arguing against pumping more oil, and Russia obviously calling for higher production, citing recovering demand. I don't exactly see where demand's coming from anywhere else, but Russia obviously does. Yeah, these sort of the markets were really weird yesterday. There's a couple of, when we were talking about gun to head challenge, DAX was right down here, and it sort of like looked like there's a potential for recovery, and it recovered really nicely. And I thought, oh, I really missed out on that. I went for Bitcoin instead, which I got blew out of. But then the sort of like the sell-off happened again. So left us with the doji yesterday, which is a sign of indecision. And it sort of like made a new high as well. So maybe that's telling us that these elevated levels aren't really the place to be for indices, but it's very difficult to argue against this risk on play. They just seem to, every time the market seem to be bought. So intraday basis, it's just continues to chop about, but for sort of like medium to longer term, you can't do anything else but buy indices. There's no other thing to do. The FTSE this morning's had a little bit of a dip lower, but has recovered nicely. A nice bullish engulfing candle on the hourly chart. Yesterday sort of wasn't a bad looking candle either, although it's a shooting star type candle. It's sort of like opened and closed higher on the day and engulfed the previous day's price action. So that was again positive. We're still sort of hovering about this 61.8% on the weekly chart. So a little bit of resistance that the market's trying to pump through. But we're still seeing sort of this bearish divergence where you get prices elevated but the momentum is slowing down, or we are starting to see a little bit of a recovery in the momentum now. So all continues to point to higher levels, but it's going to be a very choppy road ahead. The US had a sell-off yesterday afternoon, but it is steadied this morning. But that's left a bearish outside candle on the daily chart, which looks a little bit ominous. So it again, with sort of expectations maybe of a choppy move lower, but the trend higher remains in place. So we can't really. There's no real ideal scenario for the indices. Just a lot of chop. Gold. Now, gold, I think for me, there's quite an important level coming up, a resistance level, where we saw the swing high in November, and it's coming in around about 1966 to 1975, which was the September swing high. We've also got the early September swing high in 1995. We've had this ABC formation, which prices pumped above yesterday and have remained up there. 1943 trading close to the 1950 psychological level, and as I say, resistance at 65 and 75 above there. Feels like that gold is a little bit more supported, and we're still sort of elevated stock levels. So it's not necessarily just a safe haven drive, more of a weak dollar effect. But as Ian says, with the dollar, there's potential for some sort of correction, and I feel the same in gold. But as I'm bullish of gold over the long term, I think any correction should be bought into. That's about it on the indice and metal front for me.
Thank you, Steve. Okay, so other than what we've already spoken about news-wise, there didn't appear to be much else that's caught my attention on the news front. I don't know if there's anything that you guys have seen before I move on.
No, just one of the main things is that Senate runoff in the elections in Georgia. That's going to be the decide of the fiscal stimulus in the world's largest economy. So we're still waiting to hear from that. That's the real dollar driver.
Yeah, I mean, do we think that's priced in to a point? I think we all realise and believe that the stimulus is going to come at some point, don't we?
Yeah, but I suppose it's just the sort of like the uncertainty of everything. I don't
saw
know
a
what's
few
going on.
tweets of pictures in Walmart. I think there was rumours that they were going to get $600 checks or something in the US.
Yeah,
So
they were pushing for 2,000, weren't they?
Just as you walk into Walmart, they've basically got a row of TVs that are all just under $600.
You're very clever. Yeah, they're not going to get sucked in by that again. Surely they'll just be in there. They'll have a $600 check. They'll forget about the one they bought last time, and they'll just buy it again.
Yeah, but look how cheap it is, though, Steve. You can't ignore it.
I know, it's bad, isn't it?
Yeah.
It's not a life-changing sum either, is it? $600. What does that do?
No, definitely not. Not going
Keep
to buy
spread
you
on the
much, is it?
table.
Yeah.
Spread on the table for a month.
Yeah. Can't even get a gun for that.
People are still getting furlough payments in the UK.
I think it's been extended till March, isn't it?
Yeah, there's a lot of sort of like talk about. There's a lot of big companies not taking the furlough payments, sort of making their staff work instead, because there's bigger incentives that are being offered. I heard that yesterday. I'm not going to say where from, because it's top secret. But yeah, there's the government's offering other incentives rather than the furlough scheme. I should know a bit more about it, I suppose, but it just makes me wonder sometimes when the more bigger companies aren't taking advantage of it. But there's maybe something else going on with the big industry.
Maybe. Okay, gun to the head. Unfortunately, we have to keep bringing it up, but not really much to discuss yesterday. As Steve mentioned, he got stopped out of his Bitcoin trade. Ian, you were stopped on Euro Sterling.
Very quickly.
And we had a small loss on New Zealand dollar CAD of 86 or 0.36R. That was looking good at one point, but reversed obviously with the news on OPEC. So we are still in this drawdown phase, and we are desperately in need of a few wins if we can string them together. Has anybody got something ready for us this morning?
Yeah, I'll have a go.
Go on in.
Just sort of like looking at this gold really sort of pushing to test the 1965 1975 level, so I'm going to get along with that. Did anyone suggest what they'd rather see us do yesterday? I know there's about 500 people watching, so or 4 or 5 people, sorry. There's a couple of big figures there.
One guy mentioned that he made 400% on Ethereum.
Oh, did he? Yeah.
Yeah. Or 200%.
Yeah, so I'm going to go for. I'm going to buy gold at 1944. Other stop just below the previous hour's swing low.
What's the stop?
Stop is at 1939. Mine at 1945. It's just below there now.
You said 1944.
No, yeah, sorry, no, 1945 because it was above 1944. It was in the middle. So I'll take 1945 long at there, a $6 stop, and I'm targeting a move to 1969, which is a fine year, the year after I was born.
Lovely. Okay, Ian, have you got one ready?
Yeah, I suppose so. I'm just looking at all these indices, like Steve was saying. These are all the US 30 outside bar in the confluence zone, US 500 outside bar in the confluence zone, US 100 outside bar at a confluence zone. So I'm going to call a top in indices, and because of that, I'm going to go for I'm going to just buy this dollar index because it probably
indices, dollar index.
as the risk, as a risk product.
We don't understand all that risk shit, mate.
Just yours, mine. It is not mine to reason
44, 45.
It is mine to sell and buy.
89.68.
90.47. 45. What's that give me?
40.45. I don't like that green colour. What's that green colour?
Oh, sorry.
I know. I've seen that on a few of our charts. It's sort of
I'll get rid of it. How do we get rid of it?
I don't know. Don't
There
know.
Don't
you
worry,
go.
mate. It's fine. Sort it out later.
No, do it
Yeah.
now.
No.
No, just
Here you go.
that's definitely
All
going
in
to
my
be wrong.
trade idea.
89.69, targeting 90.47, stop at 89.45.
Lovely.
Okay, thanks. Okay, I'm going to take a look at cable
Oh,
today.
blue. I like the blue.
What colour do you want it?
No, we've got green and we got that tealy colour. I just don't know. Yeah, that's
Right.
it. Yeah, that's better.
This is my trade today. It's cable.
Alan.
I am selling it. We have a decent move higher there, but in the last, well, yesterday we saw a bit of a sell-off. We potentially have seen a bit of a flag formation, a bearish flag. It's not really a continuation of the trend because clearly, it's moving upwards, but looking for a counter trend move there for a continuation lower. Going to sell that at 35.73, and I measured a move of this flag formation comes down at 34.27. So I'm going to target there. I've got some support there as well. Stop loss above that high there from 6 o'clock this morning, which is at 36.15. That is 3.4 R if that pays out from here. So that's my trade of the day.
I'm calling 3 winners, I reckon, today.
Yeah, hat trick.
Nice. Like it.
Yeah, let's hope so. Certainly need it.
Is
I'd like to tune into that channel.
Is Bitcoin officially a risk asset now then? Because obviously it took a decent dive yesterday with those stocks, didn't it?
I think it's always been a risk asset, hasn't it?
Well,
Risky.
no, I mean,
Yeah.
people are talking about traders buying Bitcoin as an equivalent to the dollar, basically.
Right. Okay. Yeah. The people were talking about replacing gold. I saw as the safe haven asset or safer haven asset, maybe.
Yeah.
Maybe a top forming there in Bitcoin in the hourly chart.
Well, I mean, I'm not being funny. If you have a risk asset which is considered a risk asset and it drops 20% in one day, I don't think it's a great risk asset.
No.
I think you'd avoid it at all
Hold on
costs.
to your hats.
Yeah. Indeed. Okay.
I think when the moves sort of like go down to like about 1%, 2% a day, then maybe we can take it a bit more
it's
seriously.
all just been built up on people cashing in their 50 grand checks, isn't it? And don't know what
bounce
to do
back
with it.
loans.
Yeah, bounce back loans. They're either buying nice cars or they're buying Bitcoin. So when they've got to pay it back.
Well, if you've got to pay it back with Bitcoin, you're right because they probably had it off.
Yeah, but when's payment date?
Yeah.
See what the price is then.
Did you look into the CFD spread bet thing, Joe?
No, I didn't. Sorry. I'll do that today.
I'll get it started.
There was I did see a
easing my
comment
way back in
on the IG platform. There's still it's only liquidation only, apparently.
Oh, okay.
So that's
you can't open new positions.
No, apparently not. So I just saw on the IG platform. I saw a client being responded to because they weren't able to buy it. And there's a two-way price there, but it is because it was a liquidation only. You're only allowed to buy it if you're short. Who's short?
All right. So that'll be once everybody's out, I suppose.
I don't
get off the platform, will they?
Yeah, I don't really know the details. That they were talking about the one of the. It wasn't the cryptocurrency. It was the other Dubry Firkin. You know the Dubry Firkin.
What's he talking about?
God, I think
it's not currency. It's something
what was you
else.
drinking there?
That looked like ale, didn't it?
Early red wine.
Ale.
I noticed that bottle of red wine's gone from the corner behind him.
No, still haven't had a drink since Christmas Day.
Okay, let's wrap it up then, gents. So in terms of data today, we've got US ISM manufacturing at 3 o'clock. We've also got an FOMC speaker at 8:45 this evening UK time. They're the biggest or highest impact events that are happening this afternoon. So keep an eye out for those throughout the day. Anything else to add before we call it a day?
No.
Perfect. Let's do it then. Have a good day, everybody, and we will be back tomorrow morning.
Cheers.
Enjoy that. Cheers.
Bye.
Bye.